The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the grain trade started off the week on a Monday with lower action really across the board. Some double-digit losses in old crop corn and beans, some pressure in the wheat market as well. Is it weather that's simply just driving this trade, or is there something else in the background that we need to pay attention to? Meantime, it was a solid day higher in cattle futures to start the week. Let's talk about things. Joining us for a conversation, John Heimberg with Total Farm Marketing here on Market Talk. And John, good to have you back with us this week as we take a look at a market that on the grain side, man, oh man, just felt like we opened weaker and just kind of continued to drift that way and finished even weaker yet into the close. Just, I'm struggling to find a story here in the grains, John.
And unfortunately, that's probably the biggest problem is the fact that there's no news. That's really what we classify as promoting this market. We always talk about you need news to feed the bull, and right now the bull's not getting a whole lot. And yeah, the good demand story is kind of become old because we know it's still here. Realistically, we start digging into some of the small headlines which are out there. Obviously, you mentioned it in your intro. The weather is a big factor. We're looking at a plains forecast that's going to dry out and run above normal for temperatures here till the middle of the month. And we could see planting pace really come along very nicely. We're expecting it to be around 40% done here this afternoon. And I think we're going to really see things cruise at a pretty good pace. So that keeps pressure on the corn market that we're going to get these acres in for both corn and soybeans in that regard. But one little bit of news that's out there, maybe it's kind of sneaking under the burner, is this Brazil's corn crop and the supply of corn that's going to be coming to this export market here in a couple months. You saw one analyst group, they raised their forecast up 3 million metric tons on that Brazil crop. You hear chatter that weather's been very, very good for the production down there, and they're going to have a pretty big supply of corn coming out of Brazil, which right now is not competing against U.S. prices on the export front, but will be very, very soon. Probably in a matter of 4 to 5 weeks, we'll start seeing that corn hit the marketplace. And maybe that's just got this market a little concerned that this strong demand pace is going to slow down and that maybe we're getting more and more comfortable with the supply that we have. And that's when you just see this money kind of slide right out of the marketplace like we've seen over the last handful of days.
Well, and a couple things there, and glad you brought up the South American piece here, because I think about that along with the funds they've really been getting out of the corn market here as of late. And then on top of all this, we got a USDA report next Monday that, could throw this market some interesting news that could put us even under more pressure potentially. It's hard to say with any report, but just one has to wonder if we're going to continue to see these grain markets kind of move their way lower, as it just seems like more than anything, there's bearishness out there rather than bullishness right now.
Yeah, that's what the money flow is definitely telling us right now, that they're just moving to the sidelines. You saw, as of Tuesday, again, that's when the commitment of traders was put together, selling off about a little over 40,000 contracts, sitting that long, about 80,000. And then obviously we didn't go up on Wednesday, Thursday, or Friday. So they continue to put the pressure, to that market, including, today's obviously strong selling session, especially in that old crop. So you're seeing the money flow take this thing back to a pretty neutral position. I think here before we get to next week's report, maybe they're pricing in some risks that could be out there. And obviously, again, we still think the export demand is going to be very, very strong. And right now, most analysts in the analyst world are thinking we're going to see corn carryover get chopped on that report on Monday, maybe get us down to that 1.4 billion bushel mark, which is going to be friendly to that old crop corn price. There is some whispers out there, though, that we got this feed demand side. That's going to be a key piece of the puzzle. There is still some room for the USDA to make some additional feed demand adjustments, which would add to carryout. So let's throw a hypothetical out there, which is no changes to demand because of this large Brazil supply possibly cutting into our exports the second half of the season. And then we get a cut of feed demand by 30, 40, 50 million bushels just to kind of get that right where it needs to be, and compared to the 4-year average. Next thing you know, carryovers at 1.5 billion and up 35 million bushels. That would be really pretty negative to this marketplace, especially in the with the mindset that the supply has been getting shorter and shorter as we've been building time. So there's a wrinkle to think about that could come into play on Monday, and maybe that's something the market wants to price in here, is some of those whisper numbers that could be out there, and we're seeing that selling pressure maybe dictate that a little bit.
Is there anything with all that in mind that corn and soybean producers in particular need to think about from a risk management standpoint in this window, as this market is looking like it's just wanting to leak its way lower? I'm obviously that we always talk about that risk of trading futures and options. It's substantial, but there's tools in the toolbox here. It's just, one has to wonder, everyone's busy planting. Maybe they're not paying as much attention to their marketing plan right now, John.
Yeah, those puts are still out there, and that's still going to be a key piece of the puzzle. And, again, you can pick up some things out of the money. Volatility is fairly quiet right now, so they're not overly expensive. Just make sure you've got some floor, especially on this new crop. There is still a lot of talk, and I'm still kind of one of the ones in that camp that next thing you know, we are at 96 million acres, for next year, and increasing that number from March. And that March report is one of the least accurate reports of the year when we get those prospective plantings numbers. So there's a lot of wiggle room that we could see those numbers move around in when we get to that report at the end of June. So that makes me a little conservative, a little nervous right now, just the way prices are acting, that we got a little bit more downside here that could be coming at us, especially with just the way the momentum is pointing at this time frame, and just the chance that we're breaking some technical support levels could even push a little bit more selling into the marketplace. So, building some floor, just making sure you got that floor in. If it's a cash trade opportunity, if you get some basis bump on old crop, even though the market's down, take advantage of it. Then come back and look at some reownership for the longer term, because obviously, like in most cases, we could see things change very, very quickly. But just don't fall asleep on what could be here as a downside move yet in some of these charts, especially the way they're acting with today's close.
How about the wheat trade? Obviously, we're watching all this water that's in parts of the southern plains, Oklahoma, Texas. Have to wonder if that's going to have any impact on winter wheat there. But I mean, there's also some areas that really needed a drink of water in the winter wheat belt. Talk about this wheat trade as a whole. What stands out to you there, if anything, different from corn and soybean trade right now?
There's one of the ones we watch what the money is going to be doing here, because they could be the reason this market turns around, even though today was kind of under the weight of all the other selling grain pressure and the other grains. Funds are record short this KC wheat crop right now. Understandable, at least in terms of the fact that good moisture in the forecast, those long-range forecasts, as long as they look dry for the northern plains and western plains, they look pretty wet for the south, keeping that crop well supported. There was a little chatter over the weekend that maybe some bids were coming in for U.S. export business now that wheat prices got to this level. So maybe that puts a little bit of a floor under this market. So we'll have to really see. Now, there's still some global things going on that we need to keep an eye on. Watch Ukraine, watch Russia and their weather forecast, what's going on in that global demand, what's happening with the U.S. dollar versus global currencies. So there's some things here that maybe this wheat market's found itself a bit of a bottom here, or is in the window of a bottom, just given those, outside factors. But I'll tell you, though, if we produce a heck of a wheat crop here, which it looks like we're on the verge of, there's still a lot of downside room in front of this market, because we just still struggle on the export front, and we need to see that wheat really move in order to get that supply pile taken care of here.
And it's interesting, too, when you just look at this money flow overall throughout the grain sector. I'll rope in, crude oil under some pressure here to start the week as well. So some of those outside macro factors at play, too, John. Just, again, it makes it a tough marketing environment when everything is just lacking any sort of fresh news.
Very much so. Obviously, again, you need those news headlines that can push this market higher. And since realistically the last month or so now, obviously dealing with the tariffs, the concerns regarding trade, throw in getting a little more comfortable supply picture in the grains. You got the dollar trying to find some floor. You got the weakness in the commodity sector in general, just all kind of coming into play. It just seems like the path of least resistance in the fund's eyes right now is to be negative against the commodity space. Throw in the fact that maybe this equity market's found a little bit of footing here. Looks like things could maybe be working itself a little bit higher. We'll see. I think it's a rally that may be getting a little overextended given some of the variables, but it's still a spot that maybe some money has moved back into that equity market and commodities are on the backside again.
John Heinberg with Total Farm Marketing is joining us here today for our market analysis. John, let's go over to that livestock trade. One bright spot, cattle futures Monday, again, moving their way higher. And I know cash continues to be robust here, helping support this cattle market. What are you watching on that side of the protein complex here to start the month of May?
Yeah, that's going to still be the focus going forward. It's going to be the cash market and the retail side, which cash market last week, extremely firm. Even got some talk already today, some early bids out there trading $2, $3, $4 higher than last week, looking for southern and northern cattle. So packers maybe a little bit tight in this situation. So we'll see if that kind of holds true. So that opens that June contract up. If we're still looking at prices going to be pushing the 220 window in the South this week. And then obviously you're seeing the market reflect that. Throw in today a $2 hike at the carcass values at midday on those choice carcasses. Still keeps things at least working a little bit on the higher side here. Now it's turning into some technical barriers where we go into the upside. Taking out new highs again today, and that June opens up that door. 217, 220, I think is still targets that are easily attainable here if the cash market and the retail market can hold together. But again, just like I've been saying to producers all along here, this is really lofty territory. Can we go higher? Yeah, but the risks are also very, very high if this market were to see some form of downturn and technical correction. So make sure you're still keeping those puts in. I've been doing put work for guys all the way out into next year already in this window. It's really nice knowing that they got a $200 or close to that type floor underneath their cattle all the way through till the first of the year.
Well, and you think about this cattle trade, we'll see how the cash goes here as we go through this week and demand at the retail counter and more. We talk about this so much, and even with some outside macro factors that could be at play this week with the Fed meeting and more, a market that won't go down or a market that can't go down won't go down, it seems like, in the cattle trade, John.
Yeah, that still seems to be the path right now in terms of where this market wants to go is definitely to the high side. But again, with that, though, it's cattle market. And when things can turn, they can turn extremely quickly. We've seen that in the past. To me, though, any correction in here, at least until we see some real fundamental changes, probably are still opportunities to be long in this marketplace. That's one thing, too, for producers. If you've made some sales and you see this upside still working, don't forget about those out-of-the-money calls over top of your cash sales. At least keep your upside open, knowing that I've secured a heck of a floor on the cash market.
How about that hog trade? It just felt like we were kind of rudderless there on Monday. Futures were down a little bit. Definitely didn't get any spillover support from cattle. What are you watching in lean hogs right now, John?
Yeah, we've been a little rudderless since we kind of peaked out that one afternoon and challenging the 101 level on that June contract. And now it just feels like we're building a consolidation, range-bound type trade. Cash market and the index aren't doing anything to push this market higher. A little weakness on the retail side today took out any chance of probably finishing in positive territory today. So right now it's a market that's looking for direction. Now, I still like some upside here, but I think we need to find a little bit of a spot where this thing can turn around first in terms of some more downward push. But if we can find a way to get up and through this 100-day moving average, this $100 level on these Junes, get some clearance on that, opens us up. There's some chart gaps up around 104, 105. I still think those are some possibilities here for that June contract to get to, but at least right now it's lacking the momentum just in the news to get it up into that window.
How about over in that dairy trade, John? Any notes for you there as we start the month of May?
No, about time we get that June contract moving a little bit today on some positive cheese news. Now, June's up a solid 50 cents this afternoon, but it was trading such a discount to May. It just looked undervalued. And now we're getting some technical breakout, but that's very well could be just getting an opportunity for some producers to start thinking about some flooring action in here. But at least we're getting some value into those summer months now into the end of the year. Hopefully we continue to see some good strength and provide some opportunities for those dairy producers.
All right, John, as always, appreciate the time. Final thoughts from you. What would you mention or reiterate to folks here today?
I know you're busy, but obviously things can move very, very quickly as we get into these grain markets and summer weather and those types of things. So, make sure you got your plan in place, have some targets working for cash sales. If they hit, let them hit, then look at how to handle the risk after that. Biggest thing is just don't be sitting idle and focusing on not keeping that focus on that marketplace, because again, that opportunity like we've seen in the past can come and go very, very quickly sometimes in these summer markets. So again, like I said, find some points, find some targets. If you're behind on sales, get those targets out there. If you happen to get a rally for weather, boom, you hit a target or two, you get some sales covered or get some puts bought, and just make sure you're building your floor.
John, if folks want to reach out to you for a conversation there at Total Farm Marketing, what's the best way?
Love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
Always good to hear from you. John Heinberg, Total Farm Marketing. Thanks for joining us this week on Market Talk. Have a good one. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.